Traders, listen up. It's January 8th, 2026, and the global markets are in checkmate. We're facing an unprecedented oil logistics crisis that threatens to shatter supply chains, send inflation through the roof, and completely rewrite the rules of the stock market. Tankers are being intercepted on key Atlantic routes. Logistics tensions are skyrocketing, and today, WTI Crude is trading at $56.22 a barrel. Meanwhile, Texas refineries are staring down a 4% increase in refining costs. The S&P 500 just hit an all-time high of 6,917, while the Dow and Nasdaq are down slightly as investors rotate into defensive plays. This crisis is a million-dollar question, and for those who can read the signs, it's a massive opportunity. This is 100% educational analysis. Let's get straight to the point. So, Part 1. Why are we here? The root technical cause is the shadow oil tanker fleet. These are unflagged vessels, operating outside international regulations, and they're moving roughly 50 million barrels of oil every single month. This week, we've had 2 confirmed interceptions, which has reduced the effective shipping capacity on Atlantic routes by 15 to 20%. The knock-on effect is immediate. Shipping freight costs are up 28% in the last month alone, and insurance premiums for at-risk vessels have jumped 45%. This creates a logistics domino effect. The shadow fleet capacity drops 20%, which cuts Atlantic route capacity by 15%. This pushes freight costs up 28% and insurance up 45%. That translates to a 4% increase in refining costs, which will likely add about 10 cents per gallon to U.S. gasoline prices within the next 1 to 2 weeks. The critical data point here is the Texas Gulf Coast refineries. They handle 35% of U.S. capacity and are heavily dependent on imports, making them extremely vulnerable. Input costs for these refineries are already projected to rise by 2.8% for the first quarter of 2026. The markets are already pricing this in. The WTI forward curve is showing a 3 to 5% geopolitical risk premium implied all the way through March. Part 2. What's happening in the stock market right now? The energy sector is surging, up 3.2% in pre-market trading, with XLE at $88.20. Traditional players like Exxon are up 1.8%. Occidental, or OXY, which has significant supply exposure, is up 2.9%. Refineries like Valero are seeing their margins expand, pushing the stock up 4.1%. And the logistics and tanker companies are benefiting from higher freight premiums, with the sector up 5.2%. We're seeing a massive sector rotation. The winners today are energy, defense, and utilities. The losers are tech, consumer discretionary, and industrials. The VIX, our fear gauge, is at 18, a 12% jump from yesterday. Banks are positioning themselves to be flat on equities and overweight on commodities. We're seeing major firms like JP Morgan and Goldman Sachs accumulating call options on energy and logistics stocks. This energy inflation is projected to add about 0.23% to the January CPI. Despite weak job data yesterday, the market is still pricing in an 85% probability of a Fed rate cut in March. And in the crypto world, we saw $2.4 billion move to Binance, a potential selling signal for Bitcoin. But on the flip side, energy whales are accumulating storage, and there are rumors of a 15% increase in Q1 capex from a sovereign wealth fund. Okay, part 3. Let's break down 3 potential scenarios and the strategies for each. In the short term, over the next 0 to 7 days, there's a 65% probability that this crisis continues to escalate. In this scenario, we could see WTI crude hit a target of $60 to $62 a barrel, an 8% jump. Looking at the medium term, 1 to 3 months out, there's a 50% chance the situation stabilizes, but remains tense. WTI could push up to $62 or even $65, a 15% gain. For the long term, 6 to 12 months, there's a 40% probability of a resolution, but with lingering volatility. WTI could trade in a wide range, anywhere from $55 to $70 a barrel. Part 4. Here are 10 high probability moves for the next 12 hours. Each of these has a risk-to-reward ratio greater than 2 to 1. First, a long position on the XLE Energy Select ETF. Entry at 88.20, stop at 87, target $90.50. Second, the ITA Defense ETF. Long at 140, stop at 138, target 144. Third, Valero, ticker VLO. Long at 152, stop at 149, target 158. Fourth, the XLU Utilities ETF. Long at 82, stop at 81.20, target 83.80. Fifth, WTI Crude itself. Long at 56.20, stop at 55.40, target 57.80. Sixth, Occidental OXY. Long at 58, stop at 56.50, target $60.50. Seventh, the GLD Gold ETF. Long at 245, stop at 243, target 249. Eighth, UNG Natural Gas. Long at 1520, stop at 1490, target 1580. Ninth, buy VIX calls with an $18 strike, targeting a VIX move to 20. And 10th, Schlumberger, SLB. Long at 45, stop at 44, target 47. Remember, this is purely educational. Always do your own research. This is high-risk trading. Part 4. Here are 10 high-probability moves for the next 12 hours. Each of these has a risk-to-reward ratio greater than 2 to 1. First, a long position on the XLE Energy Select ETF. Entry at 88.20, stop at 87, target $90.50. Second, the ITA Defense ETF. Long at 140, stop at 138, target 144. Third, Valero, ticker VLO. Long at 152, stop at 149, target 158. Fourth, the XLU Utilities ETF. Long at 82, stop at 81.20, target 83.80. Fifth, WTI Crude itself. Long at 56.20, stop at 55.40, target 57.80. Sixth, Occidental OXY. Long at 58, stop at 56.50, target $60.50. Seventh, the GLD Gold ETF. Long at 245, stop at 243, target 249. Eighth, UNG Natural Gas. Long at 1520, stop at 1490, target 1580. Ninth, buy VIX calls with an $18 strike, targeting a VIX move to 20. And 10th, Schlumberger, SLB. Long at 45, stop at 44, target 47. Remember, this is purely educational. Always do your own research. This is high-risk trading. Now for the speculative traders. Let's look at 5 low-cap gems under 50 million market cap in the energy and logistics space. First, $TAP, Digitap, currently in pre-sale. It's a cross-chain omni-bank. Second, $TAPZI, TAPZI, a Web3 gaming project with volume up 40%. Third, $RTX, Remitix, a payment and remittance project where we've detected whale activity. Fourth, $Hyper, Bitcoin Hyper, a Bitcoin Layer 2. And fifth, $BDAG, BlockDAG, a high-speed DAG protocol. For these, a small entry of $500 to $2,000 max is suggested, as there's a real risk of an 80% wipeout. Make sure you subscribe. We'll have an update on the jobless claims data today at 12 p.m. Let me know in the comments. Are you going long on energy, or are you waiting for a pullback? This content is 100% for educational purposes and is not financial advice. Always do your own research. Your capital is at risk. Please consult with a licensed professional. Thanks for watching.